Hi, my name is Chris, and I'm here to talk to you about 3M. 3M is a leading global conglomerate. It was formed in 1902 and is short for Michigan Mining and Manufacturing Company. It was originally started for the purpose of mining the rare mineral corundum and then marketed it to the public as an abrasive, which they are very well known for to this day. 3M is currently composed of more than 35 business units, which are further separated into 6 business sectors. These sectors are known as consumer and office, display and graphics, electro and communications, healthcare, industrial and transportation, and safety, security, and protection measures. Let's take a look at some of these products, shall we? As I was walking through my house, I did notice numerous useful 3M products which I use every day. This includes some safety glasses made by 3M, some low-end and high-end gas masks, a water filtration device. I have some sandblaster pads. I have some 3M dust remover, some citrus-based cleaner. We have some name tags, every kind of post-it note imaginable. Have some silly putty, some adhesive tapes over here, pretty much every kind of tape you can think of. They have that brand cornered with Scotch brand. We have some heavy duty adhesives right here, some epoxy just for construction, a letter opener. We have some lint rollers over here, some command hooks and moving pads. 3M also makes medical products. We have NextCare medical tape and lotion. They make things such as mouse pads, more command products, some wire runners, more hooks, an envelope for protecting documents, and a roll of Velcro for whatever you might need that for. And this was all just walking through the house. I didn't even buy anything. It's pretty remarkable how 3M is involved in everyone's life, whether they know it or not. That diverse array of products provides 3M with a great competitive advantage. If one or two of its sectors fall short in the past year, the rest of its company can pick up the slack. They have been a slow but steady earner over their lifetime, even though their profits increased from $13 billion in 1990 to over $29 billion in 2011, which is a 100% increase in just 2 decades. Their profits rose 6.7% to a total of $1.16 billion in the past year, or $1.65 a share. This outdoes the previous estimates of $1.52 per share, even though the soft global economy, which has been damaging 3M mightily, has been taking a toll. 3M's sales are highly global. 2/3 of their business occurs outside of the continental United States, which proves just how diverse 3M really is. Now let's take a look at these ratios to further examine 3M. As you can see from this table, 3M holds its own against Johnson & Johnson, GE, and United Technologies, its main competitors. Its PE ratio is right around the rest of the group, has a slightly lower dividend yield, which can be explained with its higher stock price. Its bond rating is right around the average, as well as its beta rating of 0.8, indicating a slightly safer company than normal. Next, we're going to look at the profitability of the companies in this comparison group. And as you can see in earnings per share, 3M has a comfortable lead at $5.96 over its nearest competitor, United Technologies. In dividends per share, it sits in a close second, competing with Johnson & Johnson. And both of these fairly high ratios as well as compared to the rest of the industry, should serve as an indicator of how profitable 3M could be. And looking at book value per share, the only company that seems to handle its debt better is United Technologies, although with the amount of assets that 3M has, they really don't need to worry about that too much. So overall, if you look at these three ratios, you can see that 3M has a decent comparative advantage against the rest of the group. You can see 3M can really hold its own against Johnson & Johnson, United Technologies, and General Electric. The company's powerful $65 billion market cap, as well as its 693 million shares of common stock, ensure the customer to feel safe investing in 3M. It has a 95 price stability rating, and the most important ratio of all, return on equity. 3M has a 27.8% ROE rating, which has been growing since the financial crisis in 2009. 3M can be sure to attract investors. Although it does have $5 billion in debt, 3M can cover it with its over 3 times as many assets. Debt is not a problem with 3M. This target stock price for 2017 is estimated to be around $150 a share, despite its reputation as slow growth, which goes to show how ambitious financial analysts are about 3M and its future prospects. The company has a rating of A++ in financial strength, though only a price growth persistence score of 45, once again proving how it's pretty much known as a slow but steady earner. With all this taken into consideration, it can easily be said that 3M should be a buy, especially for long-term investors. Slow but steady always ends up winning the race.